Hi everyone. Last month I sat down and I calculated what portion of my salary is going to the government. Not just the income tax, the GST on the food that I buy, the fuel taxes every time I fill my bike, the STT every time I invest, the import duty that is hidden inside every gadget that I buy. The numbers shocked me and I consider myself as someone who pays attention to money. Today I want to walk you through every layer, not to make you angry, although you might get there, just to make you aware. Because when you're aware is only when you can actually do something about it. Before we go into the video, look at the statistics. 99% of the viewers are not subscribed to my channel. I know it's a pretty small channel. I'm doing my best to bring out fresh content for everyone out there. So if you don't know who I am, my name is Vineet. I love money, but I have very little of it. So subscribe to this channel and let's make money together. Now let's go into the video. Most middle-class Indians believe that they don't pay any taxes. Well, you're actually true on paper. If you're earning anything less than 12.75 lakhs, the government gives a full rebate and you don't have to pay any taxes. Literally zero. And when Budget 2025 was announced, a lot of people celebrated. Fair enough, because it was a very big relief for most of the Indians. But here's the thing that nobody told you. Income tax was never the biggest part of your tax story. Indian tax system is designed in such a manner that by the time the money leaves your pocket, the government has already taken its cut. In fact, multiple cuts, and you don't even see it as a line item. There are two types of taxes. Direct tax, which you are aware of, and indirect tax, which is literally hidden in everything that you consume, invest, stream, or buy in. Now look at the statistics. It might shock you. Let me walk you through a single Tuesday in Bengaluru. You wake up, order your coffee from Swiggy, book your Ola to go to work, grab your lunch at an AC restaurant, you go to the gym, pay your gym EMI, recharge your Jio plan, and go home and binge watch on Netflix. Sounds like a normal Tuesday, right? Here's what it costs and the GST that is silently adding into it. Coffee and delivery, 140 rupees product, 5 to 18% of GST, 8 rupees extra. Ola ride, 230 rupees fare, 5% of GST, 12 rupees extra. AC restaurant lunch. Oh, by the way, if you have food at AC restaurant and non-AC restaurant, the GSTs are different. AC restaurant lunch, 250 rupees, 18% GST, 45 rupees gone. Jio recharge, 300 rupees, 18%, 54 rupees gone. Netflix, 199 rupees, 30 rupees as GST gone there. Gym EMI, 1000 rupees, another 180 rupees as GST gone over there. So you add all of these GSTs, one Tuesday, 321 rupees gone as taxes to the government. No invoice, purely invisible. Here's the one that frustrates me the most. Fuel tax. When you fill a petrol in Bengaluru, 50 to 60% of it goes in taxes to the government. There is central excise duty and the state VAT. There's literally cess on top of the cess. But fuel tax isn't just about your car or the bike. It's literally on everything. Every vegetable that reaches your home was transported by a truck which uses diesel. Every delivery package that reaches your home was delivered by a scooter that uses fuel. Every restaurant meal which was cooked using an LPG gets taxed. So if the fuel gets expensive, everything downstream gets really expensive. Fuel tax is an invisible multiplier for your entire life, and unlike GST, it doesn't come with an invoice. Now we get to the one which doesn't even have your name on the bill. Inflation. Technically it isn't a tax, but functionally it exactly acts like one, except it's regressive, invisible, and you have no say in it. India's inflation has run to 5 to 7% over the last decade. So if your salary grew by 7 to 8%, you barely made 2 to 3% increase in your income. In the worst case scenario, if your salary grew by 5%, it's going backwards. You're making a loss on your income. Middle class is uniquely vulnerable over here. The wealthy hold assets, real estate, equities, which grow ahead of inflation or equal to the inflation. The poor receive subsidized goods. The middle class has salaries, FDs and savings, which quietly erodes due to inflation every year. So you figured out that inflation is quietly eating up your savings and you're smart enough to go ahead and invest. But wait, the government comes over here as well. You've entered a whole new layer of taxation. When you first invest into the markets, the government takes its cut called STT, which is the Securities Transaction Tax. It is a small cut taken whenever you buy or sell any securities. You won't see it, but it is gone well before the NAV hits your account. Then comes the STCG, which is the short-term capital gains. If you sell any assets, any equities before 365 days, and if you make a profit, you attract a 20% flat tax on that profit. If you make a loss, then the government won't give you anything. Then comes the LTCG, which is the long-term capital gains is tax. For the first 1.25 lakhs, it's completely tax free. That is, if you make a profit of 1.25 lakhs, the government won't tax you. But after that, it is a flat 12.5% tax on every profit that you make. But guess what? In budget 2024, the STCG went from flat 15% to a staggering 20%. Likewise, the LTCG as well went from 10% to 12.5%. They gave you a room of 1.25 lakhs, but they're taking more taxes if you make anything more than that. The message is very, very clear. Even if you're trying to beat inflation by investing, there's always a tax that is waiting at the exit when you try to sell and realize the profits. Now, please note that these taxes will be attracted only if you sell your positions. However, if you hold your positions for a very long time, like your SIPs for many, many years, then you won't be attracting any taxes in this year. Before you close this video very furiously, let me give you the other side of the story. India has a massive informal economy. They need money to build roads, hospitals, infrastructure for the development of the country and take care of the bottom half of the population. In UK or Germany, the tax burden on the middle class is much, much higher, but at the same time, the facilities that they get from the public services is also greater. The equation in India is still catching up, but we are in the right direction. Frustration isn't that the taxes exist, it's just that the burden of these taxes disproportionately falls on the middle class simply because they are the easiest to track. Business income, agricultural income, and the grey economy often escapes this net entirely. The salaried class is the government's most reliable ATM at the moment, not because it's a conspiracy, but it's just how the system is structured as of now. So what can you do about it? To be honest, there's nothing that you can do much about the systems. It is designed in such a way that the government keeps running and they find sources to get income from the people and run the country. The only thing that you can do is be smart with your money, invest in growing assets, don't just keep it in FDs, try to invest in assets which is growing faster than FDs. Make sure that your primary income, that is your salary, is growing much, much faster than the inflation. My name is Vineet. I love money, but I have very, very little of it. So subscribe to this channel and let's make money together. Until then, let me know your thoughts in the comments and don't forget to like, share and subscribe to this channel.